Tell us what happened. I mean, obviously we know that this stems from, this is stemming from China, and it's having kind of a domino effect on the rest of the world's markets. How serious is this? And how, is the recovery enough, or is the recovery even artificial?
Okay, so there's a couple different parts to this, but we're talking about China because that's the the country today that's slowing down a lot. But the whole world is slowing down. So it's not just China, it's Europe, and you're going to see it spread to other places. And that's why oil prices are so low. Even though there's a lot of demand for oil, the perception of future and even more demand is kind of starting to disappear. That's why prices are going lower. Now, is the world going to come to an end? No. But is it going to get ugly? It is, okay? Now, going out and buying, dried food and, whatever it is, because that's actually what my pantry looks like, even when this isn't happening, okay?
Right. You always be prepared. That's good.
You never know.
Yeah, I know.
Right. But unfortunately, that's what we eat anyway. But that's a whole nother story. But the truth is that the U.S. stock market has been taken over by computer-based trading models. So anybody who says that people are, panicking, selling, not true. 98% of all the volume, all the stocks that are bought and sold on any day are not individuals. They're just hedge funds and big institutions and companies from around the world that have huge chunks of money. So the idea that we're seeing this volatility right now, when we say that, when people are losing money, we call it volatility. Don't worry too much about it, but don't expect things to just turn around and come back quickly, because they're not going to.
Well, and the Dow dropping 1,000 points and then recovering, somewhat today. There have been some saying, well, this could all be hidden quite easily by the government's artificial suppression of, A, B, or C. I've discussed today a little bit about how, well, we've seen, just how our federal government will react, not just to something that's happening in China and the way it affects our market, but, here based in the United States as well. For instance, trying to keep interest rates as close to zero as possible, promising people that, well, it's going to stimulate an economic, and it hasn't done that at all yet.
It is such nonsense what they're saying. The only way we're going to get the economy in the United States to move, and by the way, the U.S. is the Pied Piper of the world economy. If we do well, the rest of the world will do well. The only way we do well is to cut taxes across the board. As you said perfectly, we can't stimulate the economy with lowering interest rates. We're already there. All right, we're certainly not going to stimulate
quantitative easing.
That hasn't done anything. Everyone says it's done something. Taking money, buying bad debt off the books of banks and moving that bad debt to the Fed, that doesn't do anything. None of that money makes it into the economy. So having said all of that, what you have to really look at is say, what are we scared about? Well, first thing is stocks are not expensive. In fact, they're on sale based on expected earnings. In 1987, stocks were 40% overvalued. Today, they're as of right now, about 17% undervalued. So anyone watching, say, just take a deep breath and know that they're on sale even today. So relax. But at the same time, don't expect things to get great, because the policies we have in place in this country are completely wrong for what we have right now, which is stagflation. And we will never get out of this with the administration that we have today and future administrations that think like they do.
Well, it brings me to my point. My next question for you. Bernie Sanders had said today that all of this, and it was in a tweet, in fact, he tweeted this out this morning. He had said, well, what you're seeing right now with the economy, this is the direct result of, quote, unfettered free trade. What do you say to that?
Well, am I allowed to say moron on this show?
Oh, well, completely. Go.
I am? Okay, so if I'm not allowed to, I won't say it.
No, by all means.
Okay, the guy's a moron, all right? He's an economic idiot, because that makes no sense whatsoever. And every single thing that we see around here has come from capitalism and competition. And anybody who says stuff like that, just...
I'm thinking, I'm looking at, you mentioned this administration, especially with these policies. With what are we at? Like, is it QE4 yet? Are we at QE4?
That's what's being, talked about.
That's what's being discussed as being
devalue our currency. How about this? I can make it real simple. Cut taxes across the board, expand, the base, and let more money stay in people's pockets, and we will recover.
Is this, or is it? This is a question of too much government involvement, and even when you look at China's market, it's too much government involvement. That's what is the whole all behind this.
And you know what they say to people like us when we say that? Oh, you don't want government. No, we want government, we just don't want too much government. It's real simple.